Quarter-end expectations, quarter-end expectations, and quarter-end expectations. All of you as shareholders expect the results of companies like TCS, Infosys, Wipro, Cognizant, Accenture. Have you ever imagined the revenue complexities what these companies go through? You are habituated to looking at the results of these companies by 14th of the subsequent month of the quarter. But have you ever imagined the kind of rigor, the kind of complexity, the kind of efforts what goes in closing the revenues of these companies? Let us find out. My name is Ramanujam Narayan. I am a global gap expert and I have trained and transformed more than 1000 finance professionals across the globe. Now let's take an example of TCS, Wipro, Infosys, Cognizant and Accenture what we spoke about. These companies, when customers comes to them and say that I'm not interested not only in your product but I'm also interested in the services, implementation, AMC, maintenance, everything. In this case, my goodness, how many deliverables does a customer get? All of you face this question every now and then, right? Now, this is a typical case of a multiple element deliverable contract where there are multiple services which is being bundled in the same contract. Now, you will have to bundle these services from an IND AS perspective because under the Indian GAAP literature, there was no concept of unbundling of services. Now, let us take one live example. The biggest impact as far as IND AS 115 and IFRS 15 is concerned is on SaaS companies. SaaS companies means software as a service. Now let us take an example of say an IT services which is selling software also. They are probably giving 4 elements in a particular contract. 1, they are giving a software license. 2, they are giving an installation services. 3, they are giving an unspecified future upgrade. 4, they are giving a telephone support also. Now this installation services does not significantly modify the software license. And even a third party vendor can come and do that installation on behalf of the customer. Even a third party supplier can provide the installation services. Now in this case, how many performance obligations are there as far as this contract is concerned? 1, 2, 3 or 4? Now all of you will think that there are 3, 1 or 2 performance obligations. Typically there are 4 performance obligations in this particular contract. Why? Look at it from a customer standpoint. I have repeated 3 times because all of us always think that software and installation goes hand in hand. No, they are specifically told that software does not significantly get modified on account of installation and even a third party can do the installation service. What does it mean? Means the customer gets value from all the 4 deliverables. That means there are 4 performance obligations: software license, installation services, unspecified future upgrades and telephone support, and the revenue will be recognized for all these elements separately. Now let me change the example a bit. I say that the installation services definitely significantly modify the software license and only I can specialize or only I can do that installation on account of my software license and no other party can replicate it. In this case, how many performance obligations are there? Not 4 but 3. Software, license and implementation support is 1 performance obligation. Unspecified future upgrades still gives a benefit to the customer. So, second performance obligation, and the third performance obligation will be on account of telephone support. This is the kind of complexity what IND AS 115 or IFRS 15 is getting into the business. Don't worry, it is not at all difficult. It is only about understanding and articulating the facts better. And if you are interested in knowing more and more content, subscribe to my channel Finance First.